Hello and welcome to the trade setup. In this video, we are looking at silver and gold. It is time for another update, and it appears that since our previous update, they still haven't managed to build a reliable confirmation that the bottom is in. In fact, they built 3 waves up, which is strongly suggesting that, yeah, this wave 4 right now could have a top in, pushed perfectly into the 38.2% retracement, which is the ideal target for the wave 4. So the threat of continuation directly to lower prices is still present and actually decently high. So today I will be sharing with you the region I see for a potential extension lower, assuming this would be a wave 5, as well as some more precise targets we can consider for this move. Now, I also want to start by mentioning that even though we are at the last level of support for silver, the 50% retracement at $58. Breaking it would not cause us to be bearish on silver, but it would cause a shift into the broader structure we are tracking, as right now I am considering still the possibility of an impulse, whereas if we break the 50% retracement, building this wave 5 once more into new lows, we will most likely have to throw this scenario out the window. Again, I would still be long-term bullish. I still believe it possible even for this as an overall move up to manage to continue this trend. But again, it would require a different interpretation where an impulse would no longer be able to be tracked. Now, as it currently stands, the 50% retracement is still holding. We have only seen a brief break below this last level of support, which is no invalidation we can consider. And we are tracking this wave 4 correction to complete and allow an extension to new all-time highs within a wave 5. This wave 5 could end up being quite extended, especially if we manage to still hold the current levels. Now, internally within this wave 4, I am tracking an ABC pattern primarily. I am looking for the wave 8 to have possibly bottomed here. Doesn't really matter too much. We have a 3-wave correction in place in a potential running flat, and we are looking for continuation within a 5-wave pattern down. I would have been able to consider this wave C complete as a 5-wave pattern down, but of course we had to look for the next levels of resistance to identify a stronger signal that a bottom would be in. While we do not actually need to reach those levels, it remains the ideal target, but it is decently common for the wave C to complete even before this price action is reached. For example, the 78.6% extension of the wave A is also a decently common target, and that sits at $54. Now, I can give you even more precise targets as we move into the internal structure. So firstly, let's consider this exact count where I have this idea of an ending diagonal within the wave C, in which case the region I would be considering for a bottom for the wave 5 to form within would be between $53 down to $47.30, or around that area. I'm not sharing predictions of exact numbers here. So this would be pretty much in line with structural support we would find around $49, yeah, around $49.50, right, around this area before this massive last push to the upside. Well, this is the region of where we can expect the wave 5 to form a bottom, but if I were to look at more precise targets, I could, for example, take the length of the wave 1, and typically I could be looking for the wave 5 to head towards the 100% extension of the wave 1, which sits right around $51. Yeah, we are getting closer towards a more precise target, and that is about it in terms of expectations for this exact count. Now, if I wanted to track maybe a slightly different pattern where I would still allow an impulse to form within this move down, where it's not exactly perfect, the internal wave 4 of the wave 3 would have had a deeper retracement than you would typically expect, but it hasn't broken any strong rules when it comes to its retracement, so technically an impulse would remain a possibility. But really, the most important aspect in this interpretation is that we would be tracking a 5-wave pattern down within the wave 5 as opposed to a 3-wave pattern. And this is where the target for the wave 5 would have to slightly differ, as the wave 1 would have been a bit shorter, and in that case, the target I would be watching would be $52 instead. But we can tell that this is the general area we can expect to form a more substantial bottom. Sure, if we complete the extended wave C, where it would be a perfect match with this wave A, we could expect even lower prices, but I wouldn't necessarily look too much into that at this point, as we can focus on the internal structure within this move down, whether it is a 3-wave pattern or a 5-wave pattern within this red wave 5. Now, before we move into the smaller time frame, I will repeat that it is still possible to have a bottom in. I do have a full count within this structure, but we haven't managed to generate a confirmation. That's not a deal breaker. Bottoms have formed even while only having 3 waves in the initial reversal, and even if we extend lower, it's not a guarantee that this wave 5 will play out exactly onto these expectations of targets. Now, going into the internal structure, as I was saying, this move up has failed to build what we have been looking for. We would have liked to see 5 waves up, but we have only gotten 3 waves up, and now we can still look for something like an A, B, C pattern to still extend to higher prices, potentially even still within this red wave 4. But we do not have a strong base, a base that gives us high probabilities for this move up to continue. So to identify a potential reversal, I would instead look at internal levels of resistance that I would want to see broken for the indication that, at the very least, the wave 5 in red hasn't started. And in that sense, I would be watching up to the 78.6% retracement of the wave 1 down, or the wave A, whichever it is, and this would sit at $62.35, and if we get a sustained break above these levels, it would be our signal that this structure is likely going to get at least another high. Now, for the sake of simplicity, I will be tracking 5 waves down, but I do want to remind you that it is possible to see 3 waves down, completing this as a wave 5 in red. And then it appears that even though we only managed to build 3 waves up in the initial push higher, from a smaller time frame perspective, in the follow-up relief rally, we seem to have an attempt to build a 5-wave pattern. This is not the case yet, and I am looking still for one additional high before I can consider this to be a more realistic outcome. So the interpretation I would be tracking within this move up would be something like a 1, 2, 3, 4, and a 5, where the wave 4 would have been an expanded flat. And in this interpretation, I would actually strongly need to already have a bottom in. For me, breaking below the 50% retracement here would be the first strong signal that we aren't going to manage to build this initial 5-wave move to the upside. But if that happens, if we manage to follow through in this white path, we will have the base for at least another 5-wave move to the upside after building an internal 3-wave correction. From such a base, we would have much better odds of even breaking the yellow levels of resistance and getting through into at least a reset of the red wave 4, but already improving even the probabilities of having a bottom in within the larger white wave 4. So this is what I'm interested in, and if I were to look at the internal structure within this white wave 4, I would primarily expect to see one additional low within this as a wave C, as I'm tracking here, as I mentioned, an A, B, C pattern. Within this wave C, I expect to see 5 waves down, and to be honest, it might fit even more than one additional low. And while primarily I would consider this to be in too small of a time frame to have very clear expectations of how the wave C of this white wave 4 would be unfolding, I would be looking probably at an ending diagonal to be the most likely interpretation, or a failure, to be honest, because I would have to consider this to be a wave 3, and if this is a wave 3 in an impulse, I'd have to track at least a couple of additional 4-5 patterns, and that would very likely lead to a break of the 50% retracement. And sure, you may be able to track even a leading diagonal within this move up, but I actually do not find that scenario too likely, and based on the small time frame data I have within these moves up, I prefer an impulse. Then you could technically consider the wave 5 to have topped here, but I actually do not like that interpretation too much. The wave 4 would have been a bit short, and the wave 5 may be a tiny bit too weak. Now, we actually have all the data that we can realistically track reliably in the case of silver, every level that we need to watch out for, so let's move on to the gold chart. Now, here we have a similar story, except I probably prefer the idea of a diagonal pattern to continue managing our expectations in the case of gold, but we also have a couple of options here. So I have been tracking this as the potential wave 1 down. Well, this could be the case, this would be my wave 3 down, but I could all the same track this wave 1 to have bottomed here, this to have been the wave 2 top, and the wave 3 to have formed a more substantial bottom still in the same spot, where right now the wave 4 would have reached the 38.2% retracement. I might actually even prefer this scenario. In this interpretation, the wave 3 would have reached the 138.2% extension of the wave 1 perfectly. And for these reasons, yeah, I believe we can focus on this scenario, but realistically, I would expect no difference from the internal structure I would be tracking within this wave 5 down, where once again, we only have 3 waves up in this relief rally from the currently available bottom, so I have to be aware of the risk that after this ABC pattern within what could be this red wave 4, we would see continuation to even lower prices. So similar levels of resistance could be tracked in the case of this move down, but I would probably be more restricted to tracking the move down as an ABC pattern as opposed to a 5-wave move down. But in either case, I am looking to break $4,176 for the strong indication that we aren't going to get this additional low, or at the very least that we will see a reset within the red wave 4. Then as we go into the smaller time frame, we can actually notice significantly more weakness in the case of gold within this move up, as I can quite clearly see that we haven't managed to reach the ideal target for the wave 3, which would have been the 138.2% extension of the wave 1. We are actually quite far from that. So this pattern is rather suggesting that we aren't going to see the 5-wave pattern up, at least in the case of gold. And even if we see continuation to higher prices, it would most likely have to be within either a larger 3-wave pattern or within a diagonal structure. In either case, the levels of support would technically still be holding at this point, as we are just testing right now the 50% retracement, but it seems most likely gold will see lower prices before it forms a local low as well. So rather, I'll be watching out for a potential wave B retracement area, in which case the levels of support I would be considering would start at $4,100 and extend all the way down to $4,060. We could be tracking a wave 1 up and a wave 2 down and so on within a 5-wave pattern up, but all the same, I could see this building just a larger ABC pattern where breaking the 78.6% retracement is actually going to be a rather strong signal that direct continuation lower is to be expected. We have silver is suggesting the possibility of continuation higher, the possibility of building an initial 5-wave move to the upside, while gold is rather suggesting that we would likely see direct continuation lower, and really neither of them has managed to build the necessary structure to consider a potential bottom, even from a smaller time frame perspective. Both of them only have 3 waves up that can be reliably tracked, so for now the risk is still high, and I suppose before we actually head off, we could be showcasing some ideal targets for the wave 5 in the case of gold as well. But here we will rather focus on the range alone, and the range that I'm tracking for this move down would have to be between $3,900 or just below that down to $3,700, the 61.8% extension of the wave A. And yes, this is actually drawn correctly. So continuation lower is to be primarily expected. Structural support not so much available, just a bit more in the region that has already used the structural support, which would likely suggest it will not be able to salvage the price again, right? When levels get retested, they do not get stronger, but rather weaker. So for now, we will stop here. If you want even more from me, you can check out the Patreon, but yeah, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.